Good afternoon, industry leaders. Thank you for being here. Few questions around the CEO survey and reflections from your industries and your interaction with your respective clients. Maybe we can start by the most general one around the trends that we see. AI, geopolitics, sustainability, talent, and digitizations. Those were marked by the firm as the key trends in the region. How do you feel those are reshaping your industry? Maybe we can start with you, Dr. Raed.
Yes, sure. So I think all of them are important. That's why they're identified and prioritized as trends. But it depends on the lens and the hat that you're wearing. So if your immediate priority is something operational related to efficiencies and gains of improvements in your operation, then it will be digitization and AI, because those are two elements that will take out inefficiencies from the system and will create more savings and so on. If your priority is capability building, then it will be the talent sort of war and the talent planning and the succession planning. And if your priority is more like long-term thinking and investments and so on, then it will be geopolitics, because that trickles down into the energy industry big time. Sustainability is less of an issue in the Middle East, because Middle East is not as aggressive on energy transition as other places. And so sustainability is important, but takes a backseat to availability of energy and affordability of energy.
Mahmoud, maybe a similar reflection on TMT being one of the probably most disrupted industries.
Sure. So all the trends that you mentioned, Rami, they all are interrelated somehow. You need talent to unlock the potential of AI. Geopolitics impacts everything, but definitely from a TMT lens, AI is center stage, and really it's the combination of the use case and the underlying infrastructure required that is shaping and changing and disrupting industries, not only TMT, but other industries as well. On the use case front, we're already seeing decision-making being disrupted, autonomous operations, real-time analytics, and others. But this is also only can be materialized or achieved if the underlying infrastructure from data center, edge networking, cloud is available to provide the low latency, the high compute and connect requirements. And this is where we're seeing convergence. Add to this that AI is state-backed in our region. We expect that this will only accelerate in terms of development, supply, and also demand uptake.
Maybe we can move on to a different topic. With the CEO survey has highlighted the CEOs in the Middle East are very optimistic when you compare them with the global CEOs. But there are realities on the ground, and there are harsh realities related to operational challenges and efficiencies. How do you weigh this optimism versus the reality?
Most of the financial services CEOs have got their plans right. It's mainly the execution, which is where the challenges come up. So if I were to highlight three specific issues or challenges that come up, the first one will be legacy tech and the data, which slows the execution down. The second one will be too many silos in the business. And then the third and last one I would say is the prioritization and getting the sequencing right. Okay, so you've got a great plan. Execution is where we have a bit of a disconnect, and this is what needs to be bridged. And then this is where I think the CEOs need to get their execution plan right.
There's still a lot of regulation in terms of bringing new banks into each of the jurisdictions of the Middle East. Will we see a more liberated market?
Well, it's a good point, and we have heard obviously for many years in terms of one GCC passporting, and then there have been some instances of that. But look, regulation is something which I think is going to shape up our financial services industry going forward in the region, and things which needs to be fixed or needs to be catered for. And if I were to just list them down, I would think of a few of those. Regulations around data, AI, cloud hosting, and things around cyber risk and digital assets. Now, these are the 5 areas I would say which are going to be very, very important for the industry. And if we get the right regulations right, let me give you an example. Regional scalability is possible only when you have data residency and the regulations around the 5 areas which I just mentioned harmonized so that we can optimize and scale the businesses. Given that the market size is still evolving, some markets are bigger than the others. So the CEOs would like to invest for the region rather than each of the individual countries. So if we can harmonize the regulations, that can really propel the industry.
And when we see global players coming in?
We obviously already seeing that. So if you look at, I'll give you an example for Saudi Arabian insurance market. Branch of a foreign company concept was introduced a few years back. COVID slowed it down, but you've got now 3 or 4 global insurers who have already come through that route, which is branch of a foreign company. So you are seeing the foreign players. Good for the market, good for the regulations, good for overall consumer experience, because obviously you're bringing that global expertise. But at the same time, you're also seeing consolidation in the local players, because obviously you want to see that, okay, those who are not able to compete, not able to provide the scale, not able to be profitable enough. And that's why we are seeing the consolidation, the mergers and acquisitions, and some of those players going away.
Very good.
On regulation, although not completely the same, but I think a very important point for consumer markets and for retailers operating in the region, and something that's top of mind of all CEOs, is regulations around imports. So if you look at Saudi Arabia and the UAE as markets, the amount of imports that are coming in from China and other Eastern countries is massive. And so there's a lot of lobbying happening to governments to say, how can we regulate this and what can we do to help support local companies that are here, to make sure that, you know, they're not disadvantaged, having operations here, set up costs here, contributing to economy here, and then imports come in. If you look at the Saudi Arabian market, if you look at the different categories when it comes to toys, when it comes to fashion, when it comes to furniture, and now cars, it's on the increase, the amount of imports that are coming in at a much cheaper rate. So regulation is critical to make sure that you have competitive advantage for the local parties.
Thank you. This is probably a question for all of us, but one of the challenges highlighted by CEOs, operational challenges, is around attracting talent and retaining talent, and probably the upskilling. So maybe we'll start with you, Norma. What do you feel is the single most critical skill that is lacking in consumer market today?
I think employees in the sector need to fully understand their consumer and have their views and thoughts and needs at the heart of it, and translate those needs and wants into actionable, coordinated action. So it's not just about data, it's actually moving very quickly with the consumer trend and what they need to, what they want, and ensuring that your operations match that. So most of the retail malls right now are showrooms, right? People don't necessarily walk into a mall to buy. They walk into a mall to view. So how does your employee in that mall turn that viewing, that trip, into an actual sale, whether it's online or in the store, is critical.
Dom?
In terms of talent.
In terms of talent.
Look, I think in logistics in particular, being a networked environment globally potentially, and not just in the region, I think a lot of the local players are lacking global talent that have experience overseas, that have seen how global logistics really work, in order for them to then deploy similar capabilities here in the Middle East and compete globally, which they do. And the Middle East is one of the global logistics trade hubs in the world. 15, or depending on which mode of transport you look at, between 13 and 15% of global trade goes through the Middle East. And if we don't have the talent here that can manage that efficiently and effectively, similar to other places in the world, the local players here that are trying to come up now will probably fall short. So attracting that talent is very key.
Okay, and what are the key talents that you think the transportation and logistics would be looking for?
I think
where the shortages are.
Yeah, I think it's senior white-collar management, managerial that can direct processes, knows what best practices are like, and that could be in freight forwarding, it could be in 3PL, it could be in ports operations, etc. So that experience that comes from overseas, I think that's lacking. And then as we look into things like AI and new technologies, we're now talking about automated ports, efficiencies in airports, etc. Obviously, the digital element is also very key.
Very good. Dr. Raed, a lot of the now CEOs looking at AI and they're looking at productivity and as a way of actually reducing headcount. Do you see that as an emerging trend in the ERS space?
Of course, it's in all industries. It's inevitable that AI will displace some headcount, but it will not replace the need for insight, the need for firefighting, quick reaction on the manufacturing line or on the production line. It will not replace, what to do with some of the sort of information that's coming. AI in the ERS industry is useful in addition to being a technology sort of, a disseminator and an efficiency provider into the steps of the value chain. AI is useful in downstream areas, so the likes of smart metering, data analysis, the likes of behaviors at the pump, at the gas station. It's useful in aggregating information for a one-stop shop for all your energy needs. Charging your car, bringing gas to your home for cooking and so on. How do you aggregate that value proposition and understand it from the provider side? But there are basic things that it will not displace. So yes, it will displace certain things, but not everything. It will not be as massive as we are thinking. That's my hypothesis.
But I can comment and agree with you from the logistics perspective. It's still a bricks and mortar industry. You still have to move a good from A to B. You cannot AI that away. Yes. You can make it more efficient, absolutely. And there's a lot of room for efficiencies, but we haven't seen a
combined AI robot with a robot.
Yeah, for example, yes.
But that's autonomous car, autonomous driving.
Yes, absolutely. But that happened before AI already. Yeah. We're talking about digital freight forwarders for the last 30 years. Yeah. It hasn't really disrupted. It increases efficiencies, absolutely. Yeah. And AI will do that as well. But in the bricks and mortar space, at least in logistics, I think AI will help but not disrupt as much as we think.
Sanjay, maybe financial services, the optics and the perception is that it's one of the most static in terms of talent and skills, but that might not be the case. What can you tell us about how the talent needs have changed or shifted over the years or over the coming years?
So let's look at it from two aspects. When it comes to deep industry knowledge and experience and expertise, the region is coming up the curve because it's maturing. So obviously there is always a need for talent for specific niche products. Let me give you an example. Securitization is one specific area where you would need talent. When it comes to insurance, maybe energy underwriting, reinsurance, those are the areas where the expertise can be brought in from outside. When it comes to data and AI, what we see is there are tasks which are being automated or taken away, to your point earlier, taking account the virtual assistants, the chatbots, the call center responses, but at the same time, as Dr. Raed mentioned, you can take the tasks away, make it more efficient, but then when it comes to bringing the cohesive response and strategy to execution, this is where obviously you still need expertise, which either homegrown or, as I mentioned, in financial services, you need to bring from developed markets because our markets are still coming up the curve.
Maybe on talent as well, I guess, like to think of it more as an opportunity rather than a headcount shortage. Why? Because if you take AI with the same spirit of AI, it's not AI coding as a skill that will be needed. It's really the ability to translate whatever use case you do into enterprise value. And the way this happens, it needs a combination of proper data engineering, transforming the core workflows of the operations, product thinking in a different way, And all these combined will eventually lead, and this is a complex task, and it will require a new upskilling, a new way of working. Otherwise, you will not be able to see the proper value realized from AI use cases. So it's more of an opportunity, I guess, to transform the way we work, but there is also more to be done. Very journey.
Thank you for that. The survey also tells us, the CEOs, when we ask them about if they have ventured into new sectors that historically they've not have served or worked in some sectors, 71% of the CEOs said they have. And probably the lowest sector, 50% of them said. So we see this convergence of different industries, and TMT is one of the industries that they are most sought after by all CEOs. So what can you tell us about where is this coming from and which sectors, and this is an open question for everybody, which sectors are most appealing and why?
If I take from a consumer markets perspective, you think about the whole value chain across consumer markets. You're interacting with the consumer at different points. Of course, there's cross-sector collaboration. So if I think about logistics and how you get the product to the consumer, that's really important. And a lot of CEOs have thought about bringing that in-house or partnering with others. If you think about payments, right? How do I get this? That's a very important aspect of the consumer journey. And so cashless payments we were talking about before, now bringing that system on board, technology and every aspect of it. So whether you're thinking about e-commerce or the whole value chain, that is very important. How do I partner up with telco companies as well to be able to provide more services? So it goes across the whole entire value chain of what the consumer interacts with. And therefore, I don't look at it as one sector. I look at it across. At the heart of the consumer as well is leisure and entertainment and all of that. So is that sit with consumer markets or not? So I see that these sectors, at least for the consumer, will very much cross the whole journey. And it's really, really important to have a view on all of those.
Actually, I remember one of our clients in Saudi Arabia who was in the distribution business. They carved out the logistics and they've actually invested in to turn it into a full-fledged business in addition to the retail operation. Testament to what you're saying. And I see more people are now considering it.
Yeah, because if you think about the consumer in this region especially is very, very aware of what they want, tech savvy, connected, and very, very demanding. And so if I give them the best product, but I can't deliver it on time, I'm not doing what I'm supposed to do. If I give them the best product, but I can't get it online, then I'm missing something. If I deliver the best product, but I'm not tailoring that journey to them by using tech and AI and bots and etc., I'm failing. And therefore, you need to kind of tap onto all of this to be able to deliver what you're supposed to do as a consumer markets CEO.
It's really that from the logistics culture. Yes. So in logistics, that is definitely happening, and e-commerce is a great example. For me, that's the information flows that are now becoming much easier than previously. But you have it also in other industries. Anything that logistics interacts with. It could be mining, oil and gas, whatever it is. In Australia, you now have complete end-to-end supply chains from the mine to the Chinese port where the ships arrives. And that's driven by the mining industry together with the logistics industry. You have the same in e-commerce now, et cetera, et cetera. So it's very much part of the logistics industry as well, and here in the Middle East as well. And then within the logistics industry, it's happening as well. We call it the blurring of the industry boundaries, whereas the various modes of transport, which have been very, very separate in the past, are now merging as well. So you now have a ports player who buys into shipping lines, who buys into warehouses, who buys into e-commerce, etc. That hasn't happened 15 years ago. So that blurring of the industry boundaries is definitely...
And it's exciting because from an M&A perspective, it means that there's more opportunities from a cross-industry perspective as well. And we're seeing that, right? Everyone is...
And retail in airports can be another example.
Yeah, of course. Yeah, of course. Which is critical. Travel retail is a sector that we see significant growth in.
Anything you can tell us about digital banks? We see telcos and banks trying to get into the same space.
This convergence, Rami, and then hearing the other industry colleagues obviously clearly underlying that, this convergence is so apparent. So I give you a few examples, right? Embedded finance, embedded insurance is the big thing, and obviously a number of our clients in financial services have been looking at it for a while. You take an example of consumer markets, e-commerce, when you're leaving the homepage out of your cart, buy now, pay later comes in. You have the Tabby, Tamaras, and buy now, pay later providers up there providing you 6, 12, whatever installments interest free. So obviously there is a finance angle there. When you're doing your bookings on hotels or for travel, so come out, you've got that insurance embedded in there where you have to opt out in some cases, or sometimes it is included within your fare. Some of the other examples which are very, very directly relevant to whatever financial services companies are doing. So to your point, Norma, obviously backward integration, forward integration, looking at the entire value chain, insurance companies looking at the entire ecosystem play, going backward or forward in terms of what can we do to gain more of that customer lifetime value. And then this means telecom companies setting up banks, and then banks looking at tying up with the telecom companies. Similarly, you've got, let's say, home finance connected to your cyber insurance, your broadbanding connected to your telephone lines, connected to your home insurance. All of that obviously is something which our clients are actively looking at. Some of that has already been piloted, some of them already up and running.
Yeah. Forward. I guess the beauty here that intersects with almost every industry, and that's why we're seeing the verticalization being fundamental in how telcos and service providers are evolving. And to simplify it, telcos sit on a wealth of capabilities of carrier services that are exportable and needed irrespective of the industry. And these are being combined, these foundational platforms are being combined with industry knowledge, not only on the connectivity, but also on bespoke, tailored propositions per vertical. You see the likes of STC and other operating, opening, getting licenses and having, banks. And it goes beyond that. They are into retail and e-commerce. They are into logistics. They are into defense. And this combination is fundamental. Now, it cannot happen without the subject matter expertise of the industries. And this is where partnerships and PPP opportunities take place. And hence, the growth today is on platformizing and exporting these platforms and verticalizing. And it's not only banks, as I said, it goes beyond.
Is this on the back of them becoming the telcos more of a utility, and then they're looking for new streams of revenue?
I guess it's more becoming, rather than suppliers, end-to-end partners and ecosystem enablers. Actually, this is at the core of this verticalization.
Right. Dr. Raed?
I think energy is at the basis of everything. You can't do anything without energy. It does integrate anyway. The value chain goes all the way down to what we call linked industries. So if you want to think of industry and manufacturing as separate from the energy value chain, you can sort of hypothesize that energy links with, manufacturing, heavy industries, now with specialty chemicals and material science and so on. You can also hypothesize that it links with TMT because of the AI data centers and the need for powering these data centers in a massive way.
So from a consumer perspective now, globally, a lot of consumer companies are getting into the health and in consumer health, right? Into healthier products, healthier areas. And so I think there's massive intersection there as well.
Very good. Thank you. Last question is around regulations and policy.
The aspirations as well. The race on AI and tech is a global race as well, with big ambitions of local national champions to go beyond the borders of their countries and become global champions. And there are two things that I guess policymakers started to and need to continue empowering, is scaling up in your market and being able to create that edge and differentiation also regionally. So protecting you in the market, allowing you to scale up in the market, and having the policies that allow you without breaking the data sovereignty, because sovereignty is at the core of digital and allowing you to expand. So these are the two pillars that policymakers have to keep in mind, so national champions can go beyond, can scale locally and go beyond the policy.
There's always a debate, Mahmoud, that too much regulation when it comes to AI will impede progress. And where do you strike the balance between relaxing the regulation but maintain an ethics code of conduct, if you want, around AI, and but
I guess there will be a lot of learning along the way, and demand and supply dynamics at early stages when you are more into supply, and then demand will pick up, regulations will also evolve. So and there will be a lot of learning, not only in the region, but also globally. But I guess the main promise is to give long-term transparency and visibility of what the strategy is, what the long-term policy making and regulation are, so you can give comfort for investors and local service providers to invest, to have more skin in the game. So this transparency is fundamental. Even if there are things not cracked yet, but at least seeing eye to eye on a long-term trajectory, and two, enabling unlocking the demand uptake. So it's a journey.
the AI Regulation Act in the EU is highly debated. Along those lines, is it too restrictive? Is it enough? What should CEOs in the Middle East expect? Are we going to have a GCC level regulation, or is this going to be done at the country level?
I guess there will be more maturity at the country level first, before you talk about GCC level regulations, in my opinion.
Norma, in terms of regulation, what is your wish list in terms of a regulation or a policy change that will accelerate the industry?
Yeah, as I mentioned earlier, I think it's really important to look at imports and supporting local companies here and what that looks like. So there's a lot of flow that comes from outside, and without putting the right tariffs and the right restrictions, I think you would really hurt the local companies. So it's about putting that in. And therefore, it's a plus for everyone, right? For governments bringing in more fees and et cetera, and for the local retailers to make sure that they are at the same level playing field as anyone else.
All right. Don?
In transport and logistics, there are many regulations that could be improved. The list is very, very long. It goes from warehousing regulations in cities to trucking overload regulations, etc. I think the two things that would drive most value at the moment would be a regulation for customs that really aligns customs and speeds up customs for import and export as well. And with that comes it's not really a regulation, it's a set of many regulations. It's a GCC. If we would finally get the GCC fully integrated, fully together in a sense of kind of the European Union construct, that would accelerate logistics significantly. And it would enable the entire region to participate in the global logistics hub story that every individual country is trying to achieve. At the moment, only the UAE has achieved it. But if all the 6 GCC countries would come together, be truly one union, the logistics industry within that and into and out of that would extremely benefit and be invaluable.
Okay. Sanjay?
Financial services business, Rami, as you know, is all about trust, confidence building, and then making sure that people are comfortable putting their money in. So obviously, regulatory changes are something which can be really used to underline and cement that position. I can come up with a number of examples which can really help accelerate that growth in financial services. So let's look at asset and wealth management business. Why people go to Switzerland is because of the comfort, confidence, and consistency in terms of regulations. Middle East is looking at attracting a lot of that capital. And we've looked at UAE, now KSA, opening up capital markets, and 3 consecutive years of more than 10,000 millionaires moving to UAE is a testament to the fact that people are looking at it as their long-term investment hubs. Family offices being created. All of this will not be possible unless you have the basic infrastructure, regulatory regime around that, which give the confidence and comfort to the investors. So asset and wealth management business can really gain a lot from improvement and robustness of regulations. KSA recently come up, KSA Insurance Industry recently came up, the regulator insurance authority for NIS 2030, which is to develop, regulate, and let's say accelerate the insurance market in the Kingdom of Saudi Arabia. There are nascent areas like protection and savings on the life side, which are, in terms of penetration, very small as compared to what you see globally. Now, there are regulations being brought into place. We have seen that in the past. Mandatory lines like motor insurance, third-party insurance, as well as some of the other insurances around health really propel the market. But then what we want to make sure is that, okay, all sectors within insurance, all lines of business are growing similarly. Pensions is another area which is big in terms of the global ecosystem when it comes to financial services, but it's still very nascent stage because this is still state-owned pension funds or the insurance, social insurance authorities providing that support. But when it comes to new regulations being introduced in UAE around defined contribution schemes, for example, replacing some of the pensions which is provided by the state by the private sector players, both in UAE and KSA and rest of the countries are going to follow. And the last thing I would mention is virtual assets. Again, if you have, let's say, the aspiration to be the crypto capital of the world, then obviously what is needed is the underlying fundamental regulations to make sure that the investors are ready to put their money in and have the comfort and the confidence in coming to the region. So regulations for FS is like, you can use it as a weapon which is going to really accelerate the market, but at the same time, if you do it too much, as you said, then you probably would have flight away of this capital.
Very good.
I think that point that applies to most of the industry is easing regulations and policies around R&D related activities. So things around intellectual capital, things around customs for, equipment that is used in R&D. Those blockers that exist from a regulatory perspective, and we've seen a lot of it in Saudi Arabia, for example, need to be removed so that R&D can thrive. And also related to that is at the innovation cusp. Again, we've seen a lot of investments and facilitation with the incubators and with these accelerators of companies that put together, universities and industries and blah, blah, blah. More needs to happen on that front in order for the R&D sort of community, whether it's in ERS or TMT or in, heavy duty transportation and logistics or other manufacturing, in order for R&D to kind of expand and become important in this part of the world, which will then serve a lot of these important topics. A lot of regulatory and policy needs to be eased off.
Fantastic. Thank you very much. I know government was not covered in the CEO survey, but I've taken a lot from this session to go back to my clients. Thank you for the insight. A lot to be processed and reflect on. Really appreciate your time. Right.
Great.
Thank you.
Thank you.
When it comes to financial services, the 5 biggest trends that we are seeing impacting, and this has come out in our CEO survey more or less quite accurately. The first one has to be operating model changes and improvement in the margins. That's the cost efficiency part, bringing in as much automation and digitization so that the customer experience doesn't suffer, but the profitability improves. When we look at the regulations, I think this is something which can really aid the industry. Some of the sub-segments like insurance, virtual assets, and asset and wealth management for the region can really benefit from rationalization, introduction, and bringing in the confidence as embedding to the sector. The third trend we are seeing is embedded finance, embedded insurance, and this is the convergence of different sectors when it comes to financial services with consumer markets, retail, and also getting into logistics and a number of other service providers. AI is everywhere. It's not just your robos or the chatbots. We're getting into the surgical processes like credit underwriting, pricing, and it's being embedded into all the value chain for financial services. And the fifth and the last one will be the virtual assets going mainstream, looking at tokenization, CBDCs, and then obviously institutionalization of that.
One area that consumer market CEOs are focused on is the value segment. We've seen a lot of changes in this area in the region, with Primark coming in for the first time, and with the Brands for Less, TJ Maxx transaction that happened over 2 years ago. That area will continue to grow, and there's quite a bit of focus on it. Another area of disruption is in the F&B space. Food delivery competition is massive. A lot of new entrants have come in and have caused disruption in how these companies operate, so watch the space. And within consumer markets, if we look at consumer health, GLP-1, and all related drugs have really grown. And so the implication of that on the consumer sector is definitely something to watch out for.
Yeah, so I think as the CEO survey highlighted here in the Middle East, in the transport and logistics sector, geopolitics are front of mind of many CEOs in the region. That's quite important, because about half of the logistics industry is happening in the country and driven by domestic activity and domestic economy. The other half is set by the desire of most GCC countries to become global logistics hubs. And to a degree that's already the case. 15 to 20% of global goods trade, be it maritime or aviation, are already coming through the Middle East. But most countries have even higher ambitions, and geopolitics obviously can be quite supportive, but they can also be quite detrimental to those ambitions. If we have further conflict in the Red Sea or in the Strait of Hormuz, I think the countries here in the region will need to rethink their logistics strategies, and with that comes the whole influx and impact that would have on the broader industry. It can be a good thing as well if the global supply chain is thinking about resilience. How can we double or make our supply chains more resilient across the Middle East, across other parts of the world? Either way, geopolitics will have significant impact, and the industry here in the Middle East needs to really think about how to handle that potential threat or the potential opportunity.
Actually, cross-sector orchestration is a fundamental and a core opportunity in TMT in the region. And this means at the infrastructure layer is for telcos and service providers to come together with land developers, real estate, energy service providers to come together and build the connectivity infrastructure needed. But once these foundations are there, the opportunity resides in really helping sectors move from fragmented solutions into shared platforms that could be replicable, and that's how TMT can move from service providers only or enablers into shaping how sectors will evolve and witness their next wave of growth.
In terms of opportunities, obviously everybody is talking about AI. AI is an important opportunity. It brings a lot of efficiencies in the system. It is associated with innovation. It is associated with a different way of executing on the value chain. So AI is a big opportunity, but it's not only an opportunity in the energy industry, it's an opportunity in all industries and in all domains, as we are seeing. The other opportunity that I see here in the region is this business of having to run a legacy business in hydrocarbon and add on it a novelty business in renewable energy and in sort of sustainable ways of producing energy. And I see that as a unique opportunity in this part of the world to kind of marry the two and deliver on the energy promise based on legacy sort of systems that have been decarbonized, clean, automated and improved, and adding to that a sort of a renewable energy business in solar, in wind, in upgraded grids, in batteries, and so on. So I think that is a unique opportunity in our part of the world to have these two sort of systems coexisting together.
What we're seeing across the region is a very deliberate shift in how capital is deployed. Investment decisions today are about long-term value, backing innovation, and building resilience in a volatile global environment. The Middle East is uniquely positioned with patient capital, clear national visions, and an ability to move at pace. For long-term investors, that creates a rare opportunity to partner in building globally competitive platforms rooted in the region but relevant to the world.